What is going on, traders? Welcome back to the Traveling Trader. Happy Thursday to you. First of all, I just wanted to apologize for some of the technical difficulties that we had with yesterday's video regarding the audio. I know it was a little messed up, but I didn't want to leave you without a video, so I put it up anyway. It wasn't that bad, but not up to par. So apologies for that. Looks like we have it squared away. So let us get right into it. I wanted to talk about Bitcoin's projected price as it relates to this month and potentially next month. Now, for those of you that have been a part of the channel and a part of the trading group, sign up if you want access. By the way, link is in the description below. But for those of you that have been around for a while, know that I'm not really a fan of timed analysis or time prediction because to me it's futile. It's not as important as support and resistance levels. Trying to be a fortune teller and say something will be this price on this date or within this month it doesn't really help your trading. What you want is to react to price levels and price movement, right? Not really time. However, it is relevant to this conversation, and I'll tell you why right now. Looking at Bitcoin on the 1 month chart, you'll see that we have 4 green monthly candles here, right? Going all the way back from February to May. Now, why is that significant? Well, if you look at Bitcoin's history, it rarely does over 4 green candles in a row without seeing a red candle. It has done that, during the bull rally of 2017. Between April and August, you see 5 green candles here, and then all the way back in 2013, we did have a period where there were 6 green candles, but Bitcoin was also at $12. So anyway, so looking at the at the current month, you'll see that it is turning red, and I won't be surprised if this is a down month. Obviously, something cannot progress, in a linear fashion in an uptrend forever. There has to be a regression to the mean. That's just how things work in nature, and that's how things work in trading. So I don't expect it to be overly violent for a few reasons, and I'll get into that. If you look at the MACD, you see that it is about to cross over the 21-month EMA. We're healthily above that, right? So even a drop to, and I'm not saying this is going to happen, but even a drop to $6,000 would still put us in a bullish rally in 2019 over, and still maintain above the 21-month EMA. Now, obviously, this is looking at the monthly chart. If we take a look at the daily chart, there are a few things that we can corroborate, the fact that we might have a red month this month or maybe next month. If we're forming a rising wedge on the 1 day, which is inherently, within the wedge, there's bullish momentum, obviously, because the price is rising, but the pattern itself is bearish, as we usually see a break to the downside. So we saw yesterday's rejection off of 8,300, and we're heading there today. Obviously, we're around the 0.236 fib level, as well as the resistance of this rising wedge. Now, unless something miraculous happens, I do see us getting rejected from that level again, obviously, because we're in the bullish pattern. Again, if you go back to the 1 month, the fact that this will likely be a red month. And if you look at the 4 hour, I went over this in yesterday's video, you'll see the 4 hour death cross. Not a huge deal in terms of the grand scheme, but it does point to short-term potential bearish momentum. So I would not be surprised to see a rejection off of the 8,300 price level down, at least to the support of the rising wedge. But obviously this pattern, like I said, most likely breaks to the downside. So we are going to potentially break the support of this rising wedge. Now, where are we going to fall to? Well, the next logical level is 0.382 at around 7,500. And then you have the 50-day EMA between 7,200 and 7,300. The 50-day EMA has been the most important support in most of crypto, not just Bitcoin. And I'll show you a few charts corroborating that. So if you take a look at EOS, for instance, you take a look at any of the top alts, you'll see that the 50-day is really been a monster support level in all of 2019, almost acting as its own trend line. You look at BCH, same thing. Here's the 50-day. You look at even something like BNB, something that has parabolically risen since, earlier than most alts, going all the way back to December. You'll see that the 50-day has also acted as a strong support. Even when BNB, blipped below it back in May, it jumped right above it as if it just did not want to be at that level. You look at the total market cap, same thing, the 50-day EMA, 50-day MA. Have I been saying EMA? well, I meant 50-day MA is a strong support as well. So that is why, again, trend is your friend until the end or until it isn't. So you have to bank on the fact that the 50-day will remain a strong support unless it falls below the 50-day, market structure has changed, and now we are left to assess whether we're still on a bull rally or a reversal. And we'll cross that bridge when we get there, but in terms of probability, the likely probability is that the 50-day will remain strong support. And if we do fall to the 50-day, I mean, we'll still be on a bullish uptrend, as you see here. Very sloppy trend line. But if we do fall to the 50-day at around here, you'll still be at the support of this trend line. You'll still be on an uptrend. I'm still bullish on Bitcoin as a whole, but it doesn't mean that these short-term movements can't play out. So how am I going to play this? Well, first of all, sign up if you want access to the trade alerts. That's where I will send out all of my moves. But one of the logical plays that you can make here is a potential short at around 8,300, maybe a little bit below, if you expect it to get rejected at this, the resistance of this rising wedge. Why wouldn't you do that? Especially if you take a look at the shorts as a whole. Oh, sorry, wrong thing. But if you go to compare and you type in BTC USD shorts and you overlay that on top of your chart, you'll see that shorts are pretty low right now. And what that means is you don't run the risk of coming up against a short squeeze phenomenon where there are a lot of shorts and, a move to retest resistance once again could be propelled by a series of shorts closing and hence the price moving up further. So because shorts are low, this is a fairly, it's another reason why this is a fairly low risk move. Obviously, you still want to set your stop limits in place. And what will I do with my current long position on Bitcoin? Well, I'm in profit. I want to protect that. So I might set a tight stop limit below 8,100 to protect those profits. If Bitcoin does end up confirming this pattern and falling down to 0.382 or the 50-day moving average, then obviously my short will have played out successfully. I'll close the short and I'll be looking to buy back Bitcoin at a discounted level to play the next swing up. Again, I am bullish on Bitcoin overall. Just because you are predicting or analyzing that there might be some downward movement in the short term, it doesn't mean anything for the grand scheme of Bitcoin. If you're somebody who's a long-term trader and you bought Bitcoin, at 5,000 and you just held through all the dips, you are, still in profit. I mean, you bought it at 5,000. Bitcoin is now at 8,180. You didn't have to play the swings. You don't have to jump in and out of the market. But if you have time and you are an adept trader, then why not make the most of it, right? So that is it on Bitcoin. Looking at the markets, you'll see that the markets are up about 0.5% all across the board on the major indices. You'll see that oil has surged up 2%. Now, this isn't really due to any sort of, market movements, but it has to do with a couple of oil tankers that were allegedly attacked in the Middle East. We'll leave politics out of this. But what does that mean for our trades? Well, again, if you've been following the trade alerts, you know that UWT, which is an ETF based on crude oil, has been one of our major gainers in 2019. And UWT is now down around 57% since April, a huge drop. Definitely a bear market in the oil market. And, I'll be looking to buy back UWT at these levels, especially since we're showing oversold on the RSI, similar to when we saw this bottom here back in December. Looking at the S&P, you'll see the S&P forming an inverse head and shoulders. This is obviously a bullish pattern. You'll see the mini golden cross between the 100 and the 200 formed within the third week of May or so. And we do have this resistance here at around 295, which is major resistance for the S&P. We tried to break it in September, tried again to break it in May, and we will most likely be heading there again now. So you can trade, the SPY, which is an ETF based on the S&P. There are a bunch of ETFs based on the S&P, but the SPY is probably the most popular one. And I'll be looking to either enter a long position here, with a short-term play up to the 294, 295 resistance, or I'll be looking to open in a call option in order to increase a little bit of my leverage and gain a higher percentage from this potential upward movement. Again, link is in the description if you want access to the trade alerts. The diamond traders and above gives you access to the stock trade alerts as well. It costs you less than a cup of coffee a week, and it'll go a long way in terms of getting market alerts and ideas from other traders, etc., etc. That is it for this video. Go ahead and subscribe to the channel. Hit that notification bell. Subscribe if you want access to the trade alerts. If you have a question or a comment, leave it in the comment section below. If you like this video, go ahead and leave it a thumbs up. Stay safe out there. Peace.